Palantir and HIMS just reported some pretty incredible numbers on their earnings. We have a lot to break down on that front as well, with all of the new information that we have in terms of those new financials that we have just received this evening. We're going to be going over the price action and everything you can expect from these names moving forward over the next couple of weeks here. And again, kind of before we get into all of that there with those individual names, we obviously have to start with a big picture view of the broad market here, because again, if you can understand the overall big picture view of what's happening in the marketplace, it makes a lot of these short-term volatile moves a lot easier to stomach in any direction. It keeps you a lot more level-headed here. So guys, we have a lot to cover in this one. Before we get into all of that information, if you guys wouldn't mind, if you guys do enjoy these videos here, make sure you go down and hit that like button. Costs you nothing to do it, but it helps me out a whole lot in spreading out this information to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed, turn on notifications so you're notified every time these videos do end up getting posted live. So first things first, today we did receive a little bit more information here on some of these trade talks. Now, this is what the market has been really looking to see some development on. Yes, we do have the FOMC meeting coming up this week, and it is going to be very interesting to see what Jerome Powell has to say. But Powell is in a really reactionary stance right now, where he is going to be looking to see what this current administration is doing, what the possible effects of what the administration is doing are going to actually bring about, and then he's going to act accordingly. Do we really have enough information right now, or does the Fed really have enough information right now to act just yet? In my opinion, no. In June, they might be able to, but again, we'll talk about that a little bit more in another video. The US rejects Japan's exemption from reciprocal tariffs here. The US has refused Japan's full exemption from not only a 10% reciprocal tariff, but a country-specific tariff in recent negotiations. Sources close to the matter said Monday, US officials, including Treasury Secretary Scott Bessent, told Japan's top negotiator in their meeting in Washington last week that the administration of President Donald Trump intends to put only a cut in the 14% country-specific tariff suspended through early July on the negotiating table, sources said. The U.S. side stressed in the second round of negotiations that it will only consider extending the 90-day suspension or lowering the 14% tariff, depending on the progress of their talks. So this is one of the first times that we have seen this brought to the table, that we saw that 90-day extension come in. I believe it was on April 9th. And this is kind of the first time we've seen the door being opened for this suspension period for these negotiations to continue here. Bill Ackman was talking about this today, that he thinks that there should be a blanket extension of this kind of time period here for these negotiations. And it is likely that we do see some of these extensions here as well. Now, again, we also heard some more statements from Bessent today. We are very close to some deals on trade, maybe as early as this week on some trade deals. Now, again, this is exactly what we heard from last week as well, ladies and gentlemen. So I wouldn't really get your hopes up. Maybe it's possible that we do get some deals, but again, we always have to make sure that we understand that this administration is going to talk. They're going to try and provide guidance to markets, to investors, to other countries as a negotiating tactic, and until something actually happens, there's really nothing to act on. This is also pretty much the main reason why we have been talking about this very, very important zone on the S&P 500 here, guys. The zone that I like to call the liberation zone, where this is the exact levels that we were trading right before we saw that aggressive drawdown in the market as those reciprocal tariffs were announced here. Now that we are back at these levels here, we have to think about what is the argument for the market to actually continue higher from here. Now, to me, what that is going to be is significant developments in trade talks, and that could easily get us up to this kind of 570 to 575 area right here. But again, we would also need to see the overall macroeconomic situation that we are in develop towards a period and kind of a landscape where we could expect more rate cuts coming in the near future than what the market is currently expecting. Yes, we've seen PCE turn to the downside. Yes, we've also seen the potential for the upside risk to unemployment and obviously that negative GDP print for the first quarter of 2025 here, but we're not quite there yet. Things can still develop. We could easily see these tariffs and these new trade policies actually start to have that kind of one-time price increase in the next round of data, and that is really going to spook the Fed. So like I said in yesterday's videos, like I said earlier in today's video, what you want to be right now in the market is cautiously optimistic. You do not want to think here that just because we have rallied significantly off of these lows, that we are due to just rip right back to all-time highs. Now let's get into some of these earnings reports, guys, and kind of break these down for everybody to understand these a little bit better. I know a lot of people really only care about what's on the chart. Oh, price go up, price go down. That must mean that something good or bad happened. That's not always the case, and especially if you've been paying attention to these videos here. Again, it is very, very possible, and I outlined these probabilities for you guys, that, again, you could easily see some really, really solid earnings reports, but those are not necessarily reflected in the share price in the present for a variety of reasons. The overall market, in Palantir's case, as we're going to take a look at, the market holding it to a little bit of a higher standard after how it's performed in terms of its overall share price over the last year and a half here. Now, coming over here and taking a look at how HIMS is performing right now in the after hours, it is relatively flat here. It is currently down about 2%, trading at around 40.80, right around that area there. It's bouncing between 41, little bit of volatility in the after hours trading period, but let's start breaking down these numbers here. So we have some pretty insane numbers. Revenue growth of 111% year over year. So versus the first quarter of 2024, HIMS generated 111% more revenue in this first quarter of this year. So in Q1 of 2024, they had $278 million in revenue. And in this first quarter, $586 million in revenue. That is absolutely insane growth. Net income up 345% year over year. $49 million this quarter. $11 million in the first quarter of 2024. Adjusted EBITDA, again, 182% year over year growth. Operating cash flow, 322% growth. Free cash flow, 321% growth. Subscribers, 38% growth here. Now, we're going to take a look at the subscriber number a little bit, but again, monthly online revenue per average subscriber is growing as well, which is a very, very positive metric there. It's almost like average revenue per user, but this is a very, very strong sign moving forward. Now, just these numbers here aren't necessarily the most important by themselves, but when we take a look at how HIMS performed versus the actual estimates that Wall Street had, again, revenue of $586 million versus the estimate of around $539 million. A nice beat there. Adjusted EBITDA, we have $91.1 million versus $61 million. A very significant beat there. Generally accepted accounting principles, EPS of 20 cents versus 12 cents estimate. Giant beat on earnings per share there. Free cash flow of $50.1 million, of 321% year over year. They reiterated their 2025 guidance, revenue guidance, and raised their 2025 adjusted EBITDA guidance, earnings before interest, taxes, depreciation, and amortization, to $295 million to $335 million versus the prior of $296.6 million here. All really, really solid numbers across the board, and also introduces 2030 targets of at least $6.5 billion in revenue and $1.3 billion in adjusted EBITDA. So as you guys can see here, HIMS is growing at an incredibly rapid pace. Now, one of the main reasons here, guys, that HIMS may not be seeing that aggressive movement to the upside and that investors may expect off of numbers like this are for a couple of reasons. One of them is that they reiterated this 2025 guidance here for their revenue and didn't raise it. But what this does open up the door for is continued beats in further quarters going into the rest of this year here. And if HIMS continuously is able to knock these expectations out of the park, well, then obviously you are going to see the share price eventually reflect that. Something that we talk a lot about on this channel here is, again, you guys know that we have that private short-term trading community with those swing trades, but having a short-term view with a long-term investment is a very, very dangerous thing to have. You have to understand that a lot of these investments are going to take many, many quarters and sometimes many, many years in order to play out the way that you may think they will. And one day is not going to change the end result of a potential really solid investment in the long run here. And again, when you look at HIMS here, they have grown their number of subscribers at 56% annually over the last 3 years. Absolutely staggering growth here. And they are also continuously opening up the door for global expansion here. The beauty of our model is that the potential benefits are not restricted by geographic borders. The desire for healthcare that is convenient, accessible, customized, affordable, and transparent is not limited to the US. Recent traction, in the UK has given us a strong belief in our ability to scale these benefits globally. We see opportunities for international expansion through both organic growth and opportunistic M&A over the course of the next 5 years. Again, guys, this is just another very, very solid development that could easily address their addressable market or increase their kind of total addressable market here moving forward. Now let's talk a little bit about Palantir here, guys. So going over, taking a look at the chart at the current time that I'm recording this, right around 5:10 p.m. Eastern time today, Palantir is down about 7% in the after hours here, after really coming right close to, and I believe even breaching here, let's see, 125.26 versus these highs right here. I was very close to getting above those all-time highs today. Again, guys, if you guys have been paying attention to the videos on this channel here, again, Palantir is one that has had so much success for retail investors, has grown significantly and proved the doubters wrong time and time again over the last couple of years here. But what I've said a lot is that at this point in Palantir's journey, it's in the maturing phase. And because of the fact that they have run up so significantly over the last really year and a half here, the market is going to start holding this name to a higher standard. Now, even though they had very, very solid earnings come out here, it's not enough to continue this positive investor sentiment moving forward here in the short term. Now, I'm not saying at all that Palantir is a bad stock. Obviously, it is not. They do a lot of positive things for governments, for commercial clients across the board here. But just right now, the valuation is a little bit stretched, and it's going to need a little bit of time for this one to grow into the expectations that the market has for it. So moving over and taking a look at some of Palantir's financials right here. Again, Palantir reports Q1 2025 revenue growth of 39% year over year, US revenue growth of 55% year over year, raises the fiscal year 2025 revenue guidance to 36% year over year growth, and U.S. commercial revenue guidance to 68% year over year growth here. So again, very, very solid. You can see down here, our Rule of 40 score increased to 83% in the last quarter, once again breaking the metric. For those of you guys that are unfamiliar with the Rule of 40, I think a lot of you guys that are Palantir investors are familiar with this at this point, but the Rule of 40 is just a principle that states that software companies' combined revenue growth rate and profit margin should equal or exceed 40%. Software as a service companies above 40% are generating profit at a sustainable rate, whereas companies below 40% may face cash flow or liquidity issues there. So again, very positive on that front. And taking a look at just some of Palantir's numbers in a little bit more depth here, their revenue, $884 million. The estimate was $862 million, up 39% year over year. So that was a beat on that front. Adjusted EPS came in right at expectations there. So the market might be kind of feeding off of that here in a little bit of a sense, and that's kind of feeding into that downward move. They did raise guidance for Q2 here, revenue of $934 million to $938 million, which is getting dangerously close to that $1 billion quarter there. Adjusted income from operations, $401 million to $405 million here. Now, again, for this full year, they did increase guidance as well. U.S. commercial revenue guidance above $1.17 billion, up 68% year over year. Remember, guys, one of the main problems that lots of investors had with Palantir back in the day, what was it, 4 years ago probably at this point now, was that a significant portion of their revenue was concentrated in government clients. Now, that still is the case, but their commercial revenue growth is continuing to grow there, especially with their initiatives like AIP, getting their software in the hands of these businesses and showing them how powerful that it can be and what types of results that it could generate for them. And that is why you're seeing the commercial revenue growth significantly rising there. And then also what's going to kind of feed into that too is going to be their customer count. So when we move back over here, we do see that their customer count grew 39% year over year and 8% quarter over quarter. So that is also going to be a result of their commercial business growing there. Now, when you look at Palantir's numbers here, guys, as a whole, I really don't see anything all that bad about them there. Alex Karp's commentary, we are in the middle of a tectonic shift in adoption, especially in the US, where revenue soared 55% year over year, and US commercial revenue hit a 1 billion plus run rate. We are delivering the operating system for the modern enterprise in the AI era. Hence, we're raising full year revenue guidance to 36% and US commercial revenue growth to plus 68% here. So, again, like we talked about at the beginning of this section when we started talking about Palantir, is that this one is starting to grow and mature, and it's going to be held to a higher standard by the market here. Palantir, in order for this name to really rocket above those all-time highs here, would have had to deliver some ungodly earnings. They would have probably had to have hit their billion-dollar quarter this quarter here in order for them to continue this aggressive move to the upside here. But what I will say is that this is still a company that is growing, that does have a lot of strong future prospects here. But again, like I said earlier in this video, those of you guys that are maybe newer to the market, again, I know I look young. I'm about to be 26. I've been a participant in the market since I was 14 years old, learning from some of the most successful financial professionals in the world. So I've been around for a while. Again, you have to have that longer term vision here, guys. The results in a quarter or really a week or a day are not really going to determine the results of an investment over the long run, again, unless something absolutely crazy happens. And with this one right here, again, they need to keep growing, they need to keep executing, and over time, we definitely can see Palantir grow into its current valuation here, even though it may be a little bit stretched at the present time, and that is why you're seeing this little down move in the market in the after hours today here for Palantir. But guys, that is going to wrap up this video. If you guys did enjoy the information and analysis that I provided for you guys in this one, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed, turn on notifications so you're notified every time these videos are posted live. But until next time, guys, I will see you. Peace.